Henrietta, how is your risk budget looking given these ebbs and flows that we're getting in the trade talks?
Right. So I think we're still in a fair amount of uncertainty with regards to the trade talks. We've still got uncertainty, as we just mentioned, around Brexit. So there's still risks in the system, and from my perspective, they're not resolved. As a result, we haven't got a very high risk budget at the moment, and we're being very careful in terms of stock picking. That's really what we're trying to do in the portfolios. Now, if you look at what happened at the ECB yesterday, that gives us some confidence to keep our position in financials. So we're positive on financials. We've also got a slight overweight on the BBB side on the credit books, and I think that's supported by the ECB. But we don't want to take too much risk because of these geopolitical uncertainties that are around.
Yeah, so other than financials, do you have much of a rotation more towards cyclicals at the moment? I mean, certainly if you look at equity investors, we've been talking a lot about the rotation we've seen this week from momentum to value. Has that been reflected at all in credit markets?
I think, for me, we're still not quite being compensated in terms of the cyclicals. So we're still underweight industrials and consumer cyclicals in our portfolio. We feel that there are going to be opportunities coming up in the next few months from that perspective. One thing that is interesting to note, there has been a change in terms of policies for some of the corporates that we invest in. Particularly, there was a wake-up call at the end of last year in terms of spread volatility, and we are, particularly some of the mega caps actually in the US, are looking to address their degree of leverage, and that's good for credit markets.
Do you think 10-year Treasury yields have found a bottom? Because, of course, it's the moving yields that's driven a lot of the rotation that we've seen in equity markets. 20 basis point jump in 10-year yields this week, the biggest weekly jump since 2016, but we are still around a percentage point lower than where we were at the start of the year. Have we bottomed?
Correct. I think, we touched on the liquidity effect over the summer and some of the sort of pro-cyclical hedging that happens on the rate side, which I think dragged down the yields, particularly in the US. Have we bottomed out? I think it depends on the economy. It is going to be data dependent, and we'll have to see. But in a way, from my perspective, a bit of a jump in yields is a good thing at this point.